Judith was 71 years old, lived on a careful monthly budget, and paid every bill before the due date. That was the problem. For almost 2 years, money had been leaving her account for charges that had never been rechecked after her income, mortgage balance, and Medicare eligibility changed. She thought she had only 2 choices: spend less on food or take more from savings. Then, a free benefits counselor asked her one question: which of these bills are you still legally required to pay? Judith could not answer. By the end of the review, one recurring charge was canceled, one insurance payment was being investigated for removal, and 2 federal programs could reduce costs she had assumed were permanent. Under one Medicare assistance program, providers are not allowed to bill qualified people for certain Medicare deductibles, coinsurance, and copayments. Yet some beneficiaries still receive those bills and pay them because the envelope looks official. Judith is a hypothetical example, but every rule in this video comes from current government guidance. This is not a list of bills that disappear automatically on your 65th birthday. It is a list of bills that may become unnecessary, reducible, or prohibited after your eligibility, account status, or contract changes. And near the end, I will give you the exact sentence to use when a medical provider sends a bill that a protected Medicare beneficiary should not be paying. First, I want to ask you something. When was the last time you reviewed every automatic payment leaving your bank account? Write "this year," "more than a year," or "never" in the comments. Your answer may reveal whether you have a spending problem or a bill status problem. The distinction matters. A spending problem means you are buying too much. A bill status problem means you are still paying under an old assumption that no longer matches your life. Most households review prices. Very few review whether the obligation itself still exists. So, we are going to perform what I call the 5 bill status test. For every bill, ask 5 questions. Is this charge still required? Is the amount still correct? Does another program now pay part of it? Did the contract, loan, or coverage change? And have I actually used the service during the last 90 days? We will begin with the easiest bill to recognize and end with the one most likely to be paid out of fear. Section: Do Not Re. Bill number 5. Automatic charges for services you no longer use. Judith's bank statement contained a monthly identity monitoring subscription, an old streaming service, and a membership connected to a fitness center she had not visited since moving. Each charge was small enough to escape attention. Together, they removed more than $1,000 over a year. The danger of a recurring charge is not its size. The danger is that the company gets reviewed only when the charge becomes painful. Automatic payments can continue until you cancel the service or revoke the payment authorization. The Consumer Financial Protection Bureau says you have the right to stop a company from taking automatic payments from your bank account, even if you previously authorized them. But stopping the bank withdrawal does not automatically cancel the contract or erase a legitimate amount you still owe. That creates a 2-door rule. Door 1 is the company. Cancel the service, membership, or subscription according to its terms and keep the confirmation. Door 2 is the bank or credit union. If necessary, revoke authorization for future automatic debits and follow the institution's stop payment process. Do not use only one door. If you block the payment without canceling the contract, the company may still claim you owe money. If you cancel the service but never monitor the bank account, another debit could still appear because of delay, error, or a different billing name. Here is the 90-day test. Look at every recurring charge from the last 3 months and ask, did I knowingly use this service? If the answer is no, do not cancel blindly. Identify the company, review the contract, confirm whether equipment must be returned, and check for a cancellation fee. Then, cancel in writing when possible. Save the date, confirmation number, email, chat transcript, and the name of the representative. Afterward, watch at least 2 billing cycles. The bill you no longer need may not be a dramatic $300 charge. It may be 5 quiet charges that never ask permission again. Judith found one subscription under a company name she did not recognize. She nearly reported it as fraud. After searching her email, she discovered it was the billing company for a service she had intentionally purchased 3 years earlier. That is why the first step is identification, not panic. The goal is not to dispute every unfamiliar name. The goal is to prove what each recurring charge buys today. Section: Do not re. Bill number 4. Private mortgage insurance that may be ready for cancellation. Many older homeowners assume every line inside a mortgage payment remains until the loan is completely paid off. That is not always true. Some conventional mortgages include private mortgage insurance, commonly called PMI, because the borrower made a smaller down payment. PMI protects the lender, not the homeowner. Under federal rules described by the Consumer Financial Protection Bureau, a borrower may generally request PMI cancellation when the principal balance is scheduled to reach 80% of the home's original value, if other requirements are met. For many covered loans, the servicer must automatically terminate PMI when the balance is scheduled to reach 78% of the original value, provided the borrower is current. There is also a midpoint termination rule for certain covered loans, but these rules do not apply identically to every mortgage. FHA loans, VA loans, lender-paid mortgage insurance, and loans outside the Federal Homeowners Protection Act can follow different rules. Do not call the servicer and say, "I am over 65, so remove my insurance." Age is not the trigger. The loan type, balance, payment history, property status, and applicable cancellation rule are the triggers. Use this exact question. Does my monthly payment include private mortgage insurance? And what specific date or balance would allow me to request cancellation? Then ask, is this loan covered by the Homeowners Protection Act? Or does a different mortgage insurance rule apply? Request the answer in writing. Your statement may list the charge as PMI, mortgage insurance, MI, or another abbreviation. If the servicer says an appraisal is required for early cancellation, ask who must order it and what standards apply. Do not pay a stranger who calls promising to remove mortgage insurance. Contact the mortgage servicer using the number on your statement. Judith's mortgage had been refinanced years earlier. She remembered paying mortgage insurance on the original loan, but did not know whether the charge on the current statement was still PMI, an escrow item, or another insurance product. That uncertainty mattered. Homeowners insurance, flood insurance, mortgage insurance, and escrow deposits are not interchangeable. Canceling the wrong protection could create a serious financial risk or violate the mortgage agreement. The action is not remove insurance. The action is identify every insurance line and confirm whether the requirement still exists. Section: Do not re. Bill number 3. The full phone or internet price. A phone or internet bill does not disappear because someone turns 65. However, eligible households may qualify for the federal Lifeline program, which lowers the cost of phone, internet, or bundled service. The current standard benefit can provide a monthly discount of up to $9.25 for qualifying internet or bundled service. The voice-only discount can be lower, and eligible consumers on qualifying tribal lands may receive a larger benefit. Lifeline is generally limited to one benefit per household. Eligibility can be based on income or participation in qualifying programs, such as Medicaid, Supplemental Security Income, SNAP, or Federal Public Housing Assistance. The important word is household. 2 adults can live at the same address and still be separate households under Lifeline rules if they do not share income and expenses, but a worksheet may be required. Do not assume that everyone at one address can receive a separate discount. Also, do not confuse Lifeline with the Affordable Connectivity Program. The Affordable Connectivity Program ended in 2024 after funding ended, while Lifeline remains active. That distinction matters because outdated advertisements and old articles may still promise a larger broadband benefit that no longer exists. Use the official Lifeline eligibility process. After approval, you must connect the benefit to a participating phone or internet company. The discount does not always attach automatically to your current provider. You may also need to recertify your eligibility. If you ignore a recertification notice, The discount can end and the bill can rise again. Judith had Medicaid, but had never asked whether her phone provider participated in Lifeline. She assumed benefits offices automatically shared every eligibility record with every utility and communications company. They do not. A program can exist, you can qualify, and your bill can remain unchanged until you complete the enrollment steps. That is the hidden pattern throughout this video. Eligibility does not always produce savings by itself. Action connects the rule to the bill. Section: Do not re. Bill number 2. Prescription drug costs and Part D charges that extra help may reduce prescription expenses are not one bill. They can include a plan premium, deductible, co-payments, co-insurance, and a Part D late enrollment penalty. For people with limited income and resources, Medicare's Extra Help program can reduce Part D premiums and other prescription drug costs. People who receive full Medicaid, supplemental security income, or help from a Medicare Savings Program may qualify automatically. Others may need to apply. Do not assume Social Security retirement benefits make you ineligible. Do not assume owning a home automatically disqualifies you. And do not rely on an income limit remembered from several years ago. The limits can change, and the resources counted by a program are not always the same as the assets listed on your household balance sheet. Check the current official rules. Extra Help can also remove the Part D late enrollment penalty while you receive the assistance. That does not mean every medication becomes free. The amount you pay can depend on the program level, the drug, the plan, and whether the prescription is covered. The correct question is not, "Can I stop paying my drug plan?" The correct question is, "Am I eligible for Extra Help, and what exact Part D costs would it pay or reduce?" There is another review people miss. Medicare drug plans can change premiums, formularies, pharmacy networks, deductibles, and cost sharing from one year to the next. A plan that was inexpensive last year may not remain the lowest cost plan for your current prescriptions. Compare total estimated yearly cost, not only the monthly premium. A $0 or low premium plan can still be expensive if your medicines are placed on costly tiers or your pharmacy is outside the preferred network. Before changing plans, confirm that your medicines are covered and your preferred pharmacy participates. A state health insurance assistance program, known as LIHEAP, can provide free personalized Medicare counseling and is not connected to an insurance company or health plan. That free help is important. A salesperson can explain the plan they sell. A LIHEAP counselor can help you understand Medicare options, costs, assistance programs, billing problems, and appeals without selling you a policy. Judith's prescription bill did not fall because she turned 71. It fell only after someone tested her current income and resources against the current program rules. That is the difference between being potentially eligible and receiving help. Section: Do not re. Bill number 1. Medicare Cost Sharing. A QMB protected beneficiary should not be billed. This is the bill many people pay because they are afraid of being sent to collections. The Qualified Medicare Beneficiary Program, or QMB, is one of the Medicare Savings Programs administered through states. If you qualify, the program can help pay Medicare Part A and Part B premiums and Medicare-covered deductibles, co-insurance, and co-payments. Most importantly, Medicare says providers are not allowed to bill QMB beneficiaries for Medicare-covered services and items, including those deductibles, co-insurance, and co-payments. A small Medicaid co-payment may apply in some situations. The protection is not limited to providers who choose to accept Medicaid. A provider participating in Medicare must follow the QMB billing protection. Yet, a billing system may not show the status correctly. A provider may send a statement before the eligibility information is updated. A collection notice may follow automatically. That does not mean the beneficiary should ignore every medical bill. It means the bill must be tested before it is paid. First, confirm that you were enrolled in QMB on the date of service. Second, confirm that the service or item was covered by Medicare. Third, show the provider proof of QMB status, such as the appropriate Medicaid or QMB documentation. Then, use this sentence: I was enrolled in the Qualified Medicare Beneficiary Program on the date of service. Please review the QMB billing protection, stop billing me for Medicare-covered cost sharing, and correct any collection activity related to this charge. Ask for the billing supervisor if the first representative does not understand the program. Write down the name, date, reference number, and what the office promised to do. If the problem continues, contact your state Medicaid office, Medicare, or your local SHIP for assistance. Do not send money simply to make the envelope disappear. But do not throw the bill away either. A medical statement can contain non-covered services, optional upgrades, Medicaid copayments, or charges from a date when QMB coverage was not active. The protection must match the person, date, and service. There are 4 Medicare Savings Programs, and not all provide the same help. Some primarily help pay the Part B premium. QMB provides the broadest protection among these programs for Medicare-covered cost sharing. Income and resource limits can rise each year, and states may use rules that allow some people to qualify with income or resources above the federal amounts displayed on Medicare's general page. Medicare itself advises people to apply even when they do not think they qualify. That is not a promise of approval. It is a reminder that guessing is not an eligibility decision. Judith had assumed her monthly Social Security deposit was too high for any assistance. She had never asked which income exclusions her state used or which resources were counted. Her mistake was not failing to know a complicated limit. Her mistake was deciding the answer before applying. Section: Do not re. The bonus bill. Home energy charges that may qualify for assistance heating and cooling bills do not become optional at 65. But the Low-Income Home Energy Assistance Program, commonly called LIHEAP, provides federal funding to states, territories, and tribes to help eligible low-income households with home energy needs. Assistance can reduce energy costs, address an energy crisis, support weatherization, or help with certain minor energy-related repairs. Eligibility and available assistance vary by location. Funding can also be limited, seasonal, or distributed according to local priorities. Older adults are among the vulnerable households the program is designed to protect, but age alone does not guarantee eligibility. Use your official state, territory, or tribal LIHEAP office. Do not pay an application fee to a caller who promises a government utility grant. Ask 3 questions. Is the program accepting applications now? What documents are required? And does my household qualify for regular assistance, crisis assistance, or a weatherization referral? A utility discount and an energy assistance grant are not the same thing. Some states, cities, utilities, and nonprofit organizations may offer additional programs with separate rules. This is another reason to review the bill locally, rather than relying on a national list. Section: Do not re. The 20-minute bill status audit now returned to Judith's kitchen table. She had 6 months of bank statements, her mortgage statement, Medicare notices, drug plan documents, and her phone and utility bills. Instead of asking, "How do I become more frugal?" she asked a better question. What changed after this bill began? You can perform the same audit. First, circle every recurring bank or credit card charge. Write the service, monthly amount, renewal date, and cancellation method beside it. Second, inspect the mortgage statement. Identify principal, interest, property taxes, homeowner's insurance, flood insurance, mortgage insurance, and every fee. Do not treat the total payment as one unchangeable number. Third, review Medicare and drug costs. Look for the Part B premium, Part D premium, prescription copayments, provider bills, and any penalties. Then, check eligibility for Medicare Savings Programs and extra help using current official information. Fourth, review phone, internet, and energy bills. Check Lifeline, LIHEAP, state programs, utility discounts, and local assistance without assuming age alone qualifies you. Fifth, separate cancel from apply. A subscription may require cancellation. PMI may require a written request or may have an automatic termination date. Lifeline, extra help, Medicare Savings Programs, and LIHEAP require eligibility and enrollment steps. A QMB billing error requires correction, not a new purchase. The action must match the bill. Finally, never cancel insurance, medical coverage, or a loan-related charge based only on a video. Get the exact rule from the servicer, plan, agency, or official counselor responsible for your case. A bill can look unnecessary and still protect you from a larger loss. The goal is not fewer bills at any cost. The goal is zero payments that no longer match a valid obligation or useful protection. Judith did not transform her finances with one dramatic investment. She stopped treating every old charge as permanent. The subscription ended because she canceled it. The mortgage insurance question moved forward because she identified the loan rule. The phone bill changed only after the benefit was connected to a participating provider. The prescription costs changed only after eligibility was reviewed. And the medical bill was challenged only after QMB status and the date of service were confirmed. 5 bills, 5 different actions. One principle: your age does not cancel the bill. Your current eligibility, contract, coverage, and account records determine whether the bill still belongs to you. So before you cut groceries, medication, or the small pleasures that make retirement feel like retirement, audit the obligations first. Ask whether the bill is required. Ask whether the amount is correct. Ask whether another program should pay. Ask what changed since the charge began. Then, document every answer. Share this video with someone over 65 who pays every bill immediately because they believe an official-looking statement must be correct. Paying on time is responsible. Paying a bill you were never required to pay is not responsibility. It is an error that deserves to be corrected. This video provides general educational information and is not individualized financial, legal, tax, insurance, mortgage, utility, or Medicare advice. Eligibility, program availability, loan rules, coverage, and billing protections can vary by person, state, lender, provider, and date. Verify every action through the responsible institution, government program, or qualified professional before canceling coverage or withholding payment.